There we go. All right, guys, hope you had a great weekend. Just diving right into things, starting with SPY. So last week was the first red week in 5, and we had a nice little pullback on Friday as people are now worried that the Fed is not correctly estimating the effects of inflation in the long run, as they're saying it's transitory, which I do agree with. I think the Fed is kind of BSing, so to speak, and it'll come back to bite them in the ass in the end. But looking at the chart here, again, I've been mentioning we were pretty overbought for a while. And what I was looking for was to see when the big mega caps peaked, right, and hit their all-time highs. And so we've seen in the last few weeks, Apple, for example, hit all-time highs on Thursday, sold off hard on Friday, right? Microsoft as well, hit all-time highs on Friday, sold off later in the day. We have Google as well, right? Hit all-time highs on Wednesday, sold off into Friday as well. We have Amazon, right? Hit all-time highs on Tuesday, sold off heavily into Friday, right? So you're seeing the pattern here, which is that essentially you have all these mega cap companies that previously weren't hitting their all-time highs, and now they're hitting their all-time, or now they've already hit their all-time highs, which is actually bad for the market because now, if they pull back hard, they were really helping the market to hang on, right? There was a quote that someone sent me, if I can find it, it's pretty funny actually. So someone sent me this. It says, "The weak stocks are already all heading down, and once the FANG stocks head down as well, they will drag the indices down. If you need clarification on this concept, I will explain it in baby terms. Stock market is weak right now, but the biggest stocks like Apple, Amazon, Microsoft, etc., are holding the market up. Think about it like this: Amazon, Apple, and Microsoft are like makeup on an ugly chick. Once it starts raining and the makeup bleeds, you'll see that what's going on underneath isn't so pretty. So maybe not such a great metaphor because it's kind of sexist, but regardless, it was kind of funny that someone sent it to me. And, I don't disagree that the market will bleed heavily with these big names falling, right? So we're seeing Amazon, Apple, Google, Netflix also, I think, pulled back too last week after they had all-time or highs. They went near all-time highs, but they pulled back off that pop on news they hired a gaming executive, right? Also looking at Nvda, for example, right? Nvda had rallied very heavily for the last month. I mentioned it a few weeks ago that up about 50% in a month and a half. And what happened over the last roughly 2 weeks since it peaked? It is now down about 13% in roughly a week and a half, right? So things can get ugly very fast. And going back to SPY, which is my original point, was looking at over here, what I'm looking for is this gap fill right here. This is what I've been waiting for a while. Right over here at 400 on SPY. So if we get a gap fill over here, I'll be bullish again because that would be a nice area to fill out at. But that also means we're going to pull back roughly 9% from the current price, right? So earnings I've already gotten started. Last week we had banks report. They were pretty good overall, but again, a lot of them sold off. And big tech will be reporting starting next week and beyond. So I see the market selling off perhaps into their reports, and you got to play defensive in this market now, right? We're approaching August. Typically September, October are not great months for the market, and you want to be defensive. We've had a great year already. You can see the 1-year chart. We started the year off at 319 or so on SPY, and we hit a high recently on Wednesday of 437.92. Right, that's a massive run up in 1 year. If you look at the triple Q ETF, Nasdaq ETF, right, you can see that it's been even more sharp, wherein it started off at 257 and hit a high recently of 365, pulled back down to 357, right? So very strong performance this year in both SPY and the Nasdaq. But right now you can see that Nasdaq is up 40% on the year. That's a massive gain. And as I said before, if we see these big stocks falter like Amazon, Apple, etc., for one, it'll provide great buying opportunities for those that are patient that have cash on the pullbacks. We've seen numerous pullbacks in the last year alone. I mentioned this a few times over the past year. A pullback over here of about 14% on NASDAQ, a pullback over here of about 11%, a pullback over here, again, of about 12%, right? A pullback over here of about 8%. Each and every time, it's been a great, great opportunity to buy, right? But you don't want to be buying stocks when they're expensive because the asymmetry risk is not good. You want to be buying them when they're cheap. So this is why you want to trade cautiously. I myself am going to be very cautious the next month and a half to 2 months and not add too much to my longs. My heaviest position right now is Palantir and also AMD, but I won't be adding to either of them until I see the market pull back in a broad sense, because even though Palantir, for instance, has pulled back heavily, let me just share that with you guys 1 sec. Here's the chart. Palantir. 1 sec. Where is it? Oh, these are call options. Sorry. So here's the 9-month chart because it doesn't go a whole year. Where is it? Oh, here we go. But you can see that, Palantir rallied nicely off that bottom from the previous ER, right? They reported a few months ago, pulled back down to 17 and change, rallied up about, that's not right, 62%. Actually, I guess, yeah, that is right. So rallied about 62% off of that low, which is a massive rally. Since then, in the last roughly 2 weeks, it's pulled back about 23%. So if the broad market sells off, possible we test out the 1750 area again. I'm not so confident we see that low, perhaps as low as 20, right? But again, I'm in this for the long haul, so I don't really care what happens in the next few months. I'm hanging on long term, but through call options and stock as well. Palantir reports earnings, I believe, on August 10th, so about a month out from now. And if the market sells off heavily into that report, in all probability, Palantir will follow suit down to maybe 20 or perhaps 19, which might provide a good entry point for those that have missed the pops over the past 9 months or so, right? Also looking at AMD too, right? AMD had a nice pullback off of that recent high of 95. We're still not near that all-time high of almost 100 back from January. But given that previously AMD rallied into each earning report only to sell off, it's possible that with them reporting in about a week and a half from today, they'd sell off before the report. Assuming the report is good, they may actually rally on the report itself. And look at the option chain right now in a sec. So pulling up the option chain on AMD, you can analyze the expected moves over the next little while. So for earnings, which are next week, if you go out for this Friday alone, which doesn't factor in earnings, expected move is about 320 in one direction. So from the current price, upside of about 89.20, downside of roughly 82.80 or so, right? Next Friday is factoring in earnings, right? So the IV is much, much higher for next Friday's option expiration. And the at-the-money contracts are about $3.15 each on each side. So the expected move for next Friday is about $6.30. So upside of around 92.30, or sorry, yeah, 92.30. Downside would be around 79.70 or so, right? And then if you go out a month to August 20th, which is the safer area to buy if you're playing short term on the option chain, you can see the expected move for about a month out is roughly $8 in one direction. So from the current price, upside 94, downside would be around 78, right? So keep an eye on these areas. Obviously, if you're not already in it, playing before the earning report, especially when IV's higher, is very risky. The best way to play it usually is to be patient, wait for the report to come out. If stock price sells off on a solid report, that's usually a great entry point for those that are not holding. If you're already holding and you ride into the ER, if it's flat or it goes down and you're in calls, you're going to lose. If it's flat or it goes up a little bit, you're going to lose, right? So basically what I'm saying here is that with IV higher than it normally is, you want to be very, very cautious, right? the best opportunities that I've seen typically from earnings season will be after a report, when a company reports a solid report, and then they fall to a support area. So in this case of AMD, support's around 75 again. That's the heavy support area. Second tier support would be around 80-ish, 82-ish. Right now, 85 has to hold, or that area would be the next area of support, 82, 80 area, followed by 75. And then obviously at the upside now, 92 area is resistance as well as 95. We want to see a break above 95, hit all-time highs around 100, and then push above that, which is my thesis going forward. But again, if the broad market sells off, it doesn't really matter what I think about a given stock because that will sell off as well, right? Now looking at the Qs and SPY, you can see the expected moves on those as well, right? So looking at SPY for this coming Friday, which is, let's see, 21, so 23rd, right? So going out to Friday, expected move this week is roughly 630 in one direction. So from the current price, 6.3 divided by 431, 1.5% either up or down by Friday. So upside on SPY would be around 437, right near all-time highs again. Downside would be right down to around 425 area, right? Again, I think that has a decent probability of pulling back all the way down to 400 for that gap fill, but it probably won't happen right away. It'll probably take about a month for that to happen, right? So going out to the August OPEX, looking at it over here, we can see the expected move for August, which is right now about 15 bucks in one direction on SPY. So upside would be 446, downside would be around 416, right? Keep in mind that if we fell down to 416, IV would elevate further, expanding the prices of both calls and puts, which means the expected move would also elevate as well, right? Keep that in mind too. And then looking at triple Q over here, you can see too that IV is very high right now, and put to call interest is 2.01, meaning that there are 2 calls being bought per call option that's being bought right now. So pretty bearish overall. This also means that a lot of people are already hedging, which usually means that the market won't be able to fall hard in one direction. But looking again at the weekly OPEX out to Friday, expected move on triple Q is roughly $8 in one direction. So 364 upside near all-time highs, downside 348. And then looking at the August OPEX, which is about a month out, we have an expected move of roughly $17 another direction. So upside would be roughly 374, downside would be 340 or so, right? And again, looking at the chart on triple Qs, to pull up again, right? You can see that the only real gap we have here is right over here at 314.32, another gap as well right here at 322.59. So there are a few gaps that have to be filled, and those could fill pretty fast. But typically speaking, we've seen the average pullback over the last year of around 10% from the previous high. So if that happens, pull back about 36 points. From the high would be 36 points off the high, to bring us down to roughly the 330 area, maybe 325 area. That would be the area right over here, right? And then you have obviously support right around this area right here, right? So there's a decent amount of pullback area on Qs, which means that you got to be very cautious trading the big tech names, right? Again, Apple hit all-time highs last week. They've already done that. They rallied very heavily. If you look at their chart, they rallied very heavily into earnings, right? Which they report in a few weeks, but you can see this right here, right? From June 3rd until last Thursday, they moved already 22%, right? That's a massive, massive move for the largest company in the world to move prior to the ER, right? So you want to be cautious. If you want to make money in the market, you got to be buying on support areas, not at all-time highs. So remember that as well. That's all I pretty much had to say this week. Overall, Micron I'm looking at as well for a long-term buy, but again, I want to see it hold this area of 76.50, and it's already broken below that on Friday. So next area of support would be right around 70. At 70-ish, I might consider buying some call options a few months out, but I'm also going to be cognizant of the IV as well. So keep an eye on Micron too. A few more names broke down, like Corsair broke down below 30 on Friday as well, right? Now support area is down to 27.50. That breaks down, you're looking at roughly 22, right? And that's pretty much it. CRISPR stocks, Intelia, they pulled back as well on Friday. Intelia, Beam, CRISPR, and Editas, right? So CRISPR now has support at around 130-ish, but again, it's very, very weak. And there is a massive gap to be filled at 90. I don't think it'll fill right away. It might take many, many months. But if it fills back down to 90, that would be a decent entry point for anyone that missed a nice pop off from 90-ish to 200 back down to 135, right? Keep in mind the covered call premiums on Intelia are insane. You can make a really nice return just churning even 100 shares, each month, and it's nothing to scoff at, right? I'll just show you what I mean. For example, after I go over Beam and Editas. So Beam, you can see as well, fell down from 135 already down to 88-ish, down 38% in the last 2 weeks. Editas, same thing, right? These all moved in sympathy with Intelia. Editas is down 33% the last few weeks. And then you also have CRISPR CRSP, and that is down roughly 27% the last few weeks. I'll just go over the option chain with Intelia, which is not very liquid as well, before we break off into a Q&A session. One second, we find the option chain. Intelia. So, for example, if you bought 100 shares around current price 135, and you sold the at the money contract for about 12 bucks, you're pulling in 12 over 135. So your reward would be about 8.9%. But based on your overall risk, because keep in mind your risk is your 135 minus 12, so it's 135 less 12. It's actually going to be a return based on risk of 12 divided by 123. So the actual return would be about 9.7% over the course of a month. And obviously that obligates you to sell the stock at 135 should it close above 135 on August expiration, right? But you can see how this would be a decent strategy on pop-ups, right? So if you, for example, bought some shares, waited for a pop-up, then sold call options out of the money, you can pull in some nice premiums there as well, right? A lot of premium to be had here, but right now IV is low. So the strategy isn't ideal right now, right? If you're patient, you wait for a decent entry point on the stock, on a pullback, and then you wait for a pop back up and an IV expansion to sell some covered calls. That's not a bad strategy at all whatsoever, okay? I'm gonna end it over here and break off into Q&A, but if you have any questions, drop them below, and have a great week, guys, okay?